Welcome. My name is Van Richards. I'm a chartered financial consultant, and I am here to talk to you today about stocks. And we're going to center in on one particular stock today, and that's going to be WestRock Company. I usually try to talk about larger companies or companies that are in the NASDAQ 100, but I thought that I would go off the path just a little bit today because I have a number of people that have asked me about different stocks that are in the news. In the past week, there was a lot of news about WestRock and some other different cyclical type stocks. If you watch Fast Money or if you watch Jim Cramer, you've probably heard a lot about things that are happening in the economy. And as far as different stocks go, I think that it's valuable to take a look at actually the inner workings of some of these different stocks that these news broadcasters, I'll say, are touting, and that's really what I call them. They are investors too, but they're out there for looks and for people to watch their show, as I am too. But I want to help you so that you understand whether a stock is going to be able to fit into your portfolio or not. So as you listen to some of the news, I know that it's really tempting to say, I want to buy that stock, especially when you hear someone on one of the different news channels say, this stock is going to go up 50%. This stock is going to go up, I bet you it goes up 100%. And you sit there and go, I want to buy that stock. But I think that it might be better if you go back and take a look at that stock and see how it fits into your portfolio. Remember, there are three things that I talk about here that contribute to a good stock. One is going to be earnings, then competitiveness, and then stability. So we're going to take a look at WestRock today and let you know a little bit about what they do, because if you listen to the news and they're saying, hey, buy WRK, what is WRK? It's WestRock. All right, so let's learn a little bit about WestRock and get into the daily stock analysis. I have to call it the stock analysis today because this is not a NASDAQ stock. All right, the company that we're going to center on today was WestRock. It's in the news a lot recently. If you've been watching Fast Money or Jim Cramer, as I mentioned, you've heard them talk about WestRock. So let's get into it. Let's dig into this stock and see what's going on with it. Let me make the screen just a little bit bigger with you because I want to tell you just a little bit more about what WestRock does. So well, before I get into that, let me remind you, if you need help with your finances, go over to richardsfinancialplanning.com and sign up for a time to talk to me. I can only do this with residents of Texas, but I'm more than available. So let's get into talking about this stock. This is WestRock. It's not long, so let's take a look. Okay, great. Now, the value that you're going to see on the screen right there, the 41.25 was at 2:27 p.m. when I started putting this together. They actually closed today. It was up a little bit at 41.09. Not that bad from that standpoint. It's a $10.67 billion company. Let's take a look at what the history of this company has been. They've been affected by the pandemic just like any of the other companies, actually more so to some degree. They're a cyclical stock. In other words, they're going to lag behind. They're more of a value-oriented stock. They're not more like a growth stock like the tech stocks that are out there. This is a graph that you see. If you're looking at the spaghetti graph, this is the last 5 days. About a week ago, it was trading for 39.10. Today, let's say at 41.25, which is actually a little bit less than that, really at 41.09, it was up about 5.5%. Let's go back and look at it over a period of a year. Now, this is the interesting part. This is when the coronavirus pandemic crash happened in between February and March. The company kind of moved forward and then moved back. They really had to shut down for a lot of different reasons. One is, the country shut down, so they shut down all their productions. And when they shut down their productions, they're obviously not making boxes or paper anymore from that standpoint, so they can't sell anything. It's not like, Apple, if they keep going, they keep selling stuff. But the idea is here, they were a little slower to get back up to movement. And if you follow the spaghetti graph, recently in the last month or so, they've been moving forward. Over a period of a year, they've had a decent comeback. They started a year ago on the 21st of 2019 in October at 35.74. And again, they ended the day about 41.09. This is 41.25. So that's about a pretty close to a 15% increase in value. Remember, as I always tell you, the past performance is not going to be a guarantee to future results. But look, this is important to notice. This is a cyclical stock. That means that it's not going to keep going up on a regular basis. This company, as we'll discuss in a few minutes, has also gone through some mergers and some acquisition activity, and they have a possibility of that continuing to happen. But let's look back 5 years. 5 years ago, this stock was trading at $44.53 some odd cents on the 24th of October in 2015. Again, today it ended around $41. And that's a negative 7.38%. That's an average loss of about 1.5 a year. Obviously, you want to hope this is not going to be a guarantee of future results. But if you're out there and you're thinking that this stock is going to keep going straight forward because the newscasters are saying this is a stock on the move, think twice. Is this going to fit into your portfolio? Could it have some increases in the next couple of weeks, next couple of months? Maybe. So we just have to take that with a grain of salt from that point of view. So let's keep moving on just a little bit and look at it. As I mentioned to you before, Steve Grasso, if you listen to Fast Money, he was out last week saying that this stock could possibly double or triple. The dividends, I'll also drive this stock a little bit. It's right now at a 1.95% dividend, which is good. Now, you may be thinking, hey, I'm a retiree. I want to buy this stock. It's more than what I'm making in my, whatever account. But guarantees are not associated with dividends. Let me show you what's happened with the dividends on this stock. This is the annual spaghetti graph again. Before the pandemic, they were paying a 47-cent share dividend. After the pandemic hit, they had no choice but to cut their dividend more than half. So they've gone from 47 cents a share per quarter down to 20 cents. Now that could be a good thing because they're holding back costs. Now, when I look at a company like this, I want to look at the earnings too. And I think that if we chart those, that really, really is helpful. Now, I don't need to make this much bigger because I think if you just look at the dark lines, you can see that the actual earnings were over top of the estimated earnings every single quarter. So they've actually done pretty good. So if you're thinking if they're going to be able to meet their expectations, if they come out with in November, if they come out and say, we have this expectation, you can probably stick to that. Now, look, this is a good comparison to look at. There's another company that's being talked about in the news right now, too. It's Olin. Olin is a chemical manufacturer. Look how their earnings go with expectations. If you follow the graph, you can see they're over top of expectations, they're under expectations. And the reason I would look at a stock like this with a jaundiced eye is because they don't meet their expectations very well. If I go back and I look at WestRock actually does. WestRock has been meeting expectations pretty well, unlike Olin. Now, if we keep going on, though, we look at the moat. Now, remember, this is what a moat is for a company. Now, when you look at the moat of a company, remember a moat is going to be that imaginary barrier. It's going to be that imaginary barrier that's between the company and their competition. And when we look at a company like WestRock, what we're doing now is we're seeing that the reason why they don't have a moat is because they have lower expectations for returns as the decade moves forward. Now, you might be saying, I'm just looking at this stock for a year. If that's you, that's okay. But if you're looking to add this into your portfolio for a long period of time, you're probably not going to make as much money off of it as you might expect. The paper to liner board industry has a lesser demand as time goes by, or it historically has. Now, right now, everything's being shipped. So we see a lot of usage by companies like Amazon and other different users for liner board, for shipping, and also for boxes in itself. There's an increase in competition that we're seeing too. That's another reason why there's no moat, and there's also a difficulty in keeping up with the competition and maintaining profits. So let's keep going on from that standpoint. I've talked about a few of the negatives associated with the moat. Let's look at some of the different positives that are associated with it. Now, when you look at WestRock, WestRock is actually a conglomeration of two different companies, of Rock 10 and Midwest-Vesco. Midwest-Vaco. Make sure I say that right. The merger actually brought into play some lower cost. When you go through a merger, you're able to shed some unneeded cost, and that's actually a positive that's worked in Westco's, or actually in WestRock's advantage. Competitors, you're going to find that there's companies that we're going to look at in just a minute, like International Paper. The competitors are actually allowing prices to move up a little bit. They're not as cutthroat as in the past. Now, I won't say that it's collusion, but the point is that they're allowing prices to naturally go higher without trying to cut each other's throat from that standpoint. And that's a positive. It might not be a long positive, but it is a positive currently. The other good thing is this. Environmentally friendly businesses are a big deal. Do you remember going into a grocery store and plastics were a big issue? Actually, I know in some cities, actually in some states, I know in Austin here in Texas, they didn't allow plastic bags in the grocery stores. Now, whether they're doing that now during the pandemic, I don't know or not. But you know that you get a lot of your deliveries from Sprouts and Amazon and Whole Foods, whatever the case is going to be, or even Kroger's and H-E-B. A lot of those are coming out in paper bags, and that paper is more environmentally friendly, and that's a better thing for a company that has a public stock. Now, still continuing, you got to think about the negative sometimes with these stocks, because if you're thinking about buying it for the long term, future acquisitions, like when we saw Rock 10 move in with the other company, that's not happening as much as it did in the past. The margins are going to lessen as the pandemic lessens. If there's less shipping that's going on because people go back out to brick and mortar, you're going to have less need for packaging in itself. So that could possibly be a negative. And there's actually fewer acquisitions that go along, fewer companies that work, you know, as an acquisition with each other. These are not huge companies either in relation to, you know, the large tech companies that are out there. You're going to see that right now. WestRock, their three biggest competitors are International Paper, Sunoco Products, and Graphic Packaging. Graphic Packaging is more of a small company, but International Paper and Sunoco Products are a little larger. Now, when we look at how large is large, WestRock is at 10.65 billion. I think I've mentioned that before. International Paper is a larger company at 18.35 billion, and then Sunoco is around 5.51 billion. All three of these are considered mid-cap value stocks. And I've mentioned to you a little bit about the idea of value versus growth. Let me kind of give you a little bit more education on that. When you have a value stock is actually trading closer to the fair market value of that stock. The fair market value they get from a variety of different ways. But when you have a growth stock, let's just say a Tesla, okay? If you have a Tesla as a growth stock, it's trading far over top of actually what its real value is, whether it's the real value is determined in a couple of different ways depending upon the analyst. It could either be a multiple of sales, a multiple of earnings, whatever the case is going to be. So that all depends on the analyst. Also, as I mentioned before, Graphic Packaging is a competitor too, but that actually should say $4 billion, not 4 million. That's a mistake on my part. All right, but let's keep going on. I want to take a look too at the last 5 years, because 1 year in a cyclical stock is not enough to identify the possibilities of what might be going on. I know a lot of you out there, you may buy a stock or you may buy a mutual fund. I have clients who work for employers and they don't ever change their portfolio holdings, and that's okay. That's the way that they prefer to do it, and that's the type of investments that they're investing in. Now, as I talk to you about individual stocks, please don't take it that I'm encouraging you to go out and get one stock. I'm not. What I'm trying to do is to get you to look at what possibly may happen with one stock. I read a really good thing that was posted. It was a tweet by Motley Fool yesterday, and it was that if you have 25 stocks, you could certainly expect 10 of them not to do well at any particular time. And I think that's true. You can't buy one stock and say, I'm going to make my fortune off of this. As tempting as it may be to listen to the news shows, understand that the possibility of a loss is still there. And the way that you can avoid that loss, maybe avoid is a wrong word, the way that you can lessen the possibilities of that loss and increase your possibilities for profit is by diversifying in a portfolio. So look at the last 5 years. This is what we see. We see actually that Sunoco Products is the one that has done well, done better than the others over the last 5 years. And when we look at WestRock, WestRock has actually done less. Now, remember, the idea of buying a stock to make profit is buy low, sell high. Gee, that's a thought. But the idea there is that when is the best time to buy? I don't know, or which is the best stock. Here's the idea, though. You have to look at what the fair market valuation is on these stocks. Now, I mentioned that the close is just a little bit different than this. It's actually 41.09. I took the price at about 227. But the fair market value that's been pegged by Morningstar is at $49 a share. And they get that by a multiple, I believe, of EBITDA, or that's earnings minus a bunch of different stuff. They're going to say that this stock is a 4-star stock and it's trading a little bit under what its true valuation is at about 15.82%. They're estimating that a 5-star value would be actually at $29.40. Now, when we look at what the other analysts out there have said about this stock, there's 11 analysts that are following this stock right now. 7 of them are saying that it's a strong buy. 3 of them are saying that's a hold. 1 of them is actually saying that it's a sell. So when we average it out, it comes out to be this. So it's actually a moderate buy on the analyst estimates. Now, a lot of times when I look at a different stock or different stocks, I think that before I jump in and buy it, I want to know what's going on from a company level. So I don't do this usually in this show, but I think that it's important today, since we're talking about a stock that's been publicized a lot, is to look at what the insiders are doing. So let's take a look at that just a little bit. Okay. Inside the company in the last 3 months, we've actually seen one insider. Now, when I say an insider, that's going to be either perhaps a officer for the company, president, vice president, senior vice president, someone like that, or a director of the company. And those are considered insiders. When we look at the last 3 months, there's only been one insider that's bought. But when we look at the last 6 months, there's been 14. In the last year, there's been 60 insiders that have bought compared to 17 that have sold. And these are fairly sized amounts. This is actually a list that goes back over the past, let's see, it goes back to the 14th, today being the 19th. You can see from that standpoint. Let's make it just a little bit bigger so you can see who's doing what. Okay. A lot of these, if you look them up, you'll see Julia McConnell. Julia McConnell is an officer with the company. She acquired, right here, you can see 12,500 shares. That was about $357,000 in value at that point in time. And if you were to look at the whole list, you're going to see actually that there are several officers that are buying in this particular stock. Now, just as a kind of a comparison, if you go back and you look at a tech company like AMD, AMD has had in the past year a lot of the officers that have been selling. And I think that that's an indication that they feel that that stock is overpriced. And when you look at a stock, when you have like WestRock, you have a lot of the insiders that are buying. Some people would say, I'm just giving you this idea. I'm not telling you to go out and buy it with this information, but just keep this in mind. Some people would say that when a company's officers are buying the stock, they have a lot of faith in the company and they have a lot of faith in the value going forward of the company. Now, you can take that for what it's worth and go from that point. But that gives you a little bit of an understanding. You have to understand what's going to fit into your portfolio. And if you need help in understanding what's going to fit into your retirement portfolio and you live in the state of Texas, I'm more than happy to help you out. If you have a question, though, and you live no matter where you are, I'm happy to answer questions. If you want to email me a question, just go to the platform that you're watching on, enter in comments. If you go to the platform at YouTube, you can subscribe and get notified when these broadcasts come available. Today's a little bit earlier than usual. Most of the time I try to do this after the market closes. Today I'm going to go vote with my family, and I'm a capitalist, so that'll tell you who I'm voting for. But the idea is usually I do them after the market. I may do them a little bit earlier. I want to review stocks that you're interested in. So if you have a particular stock that's out there and I can find information that I think is valuable to share with other people, let me know about it. I'm glad to take a few minutes and see what's available and see what's out there and share the knowledge that I have with you. So it's Monday, so go out and vote. And with that said, I will talk to you tomorrow. Have a good evening.